Hi, dreamers. So today I want to break it down to the most basic level. How do I pick stocks? What are the performance indicators that I look for? And exactly where can you find them? So, together we're going to go through an exercise where I show you a very simple Excel spreadsheet that you can put together yourself. This is a special video just for newbies, but even more experienced stock investors might find it interesting to know what I am looking for. Okay, guys, you ready? Here we go. Okay, so there's so many things you could look at and really get distracted by if you're analyzing a company and stock. But I'm going to show you the most important stats that I look at when I'm trying to create a list of stocks that I'm interested in, and I want to do quick research to see if they should be in my consideration set. Because you could spend hours and hours going down through the balance sheet and really researching these companies, which I encourage you to do. But sometimes when you're just starting out, it gets overwhelming. And that's not what I want for you. So let's go through this together. So you start with a ticker. And I'm going to show you 4 or 5 others once we fill in the first one, just as a point of comparison. But I picked Fortis, ticker symbol FTS, for us to gather information together so that you know where to find the information and then can go fishing for yourself. So let's zoom in here. We are going to gather what is the dividend yield, what is the beta, or how volatile that stock is. How many years of dividend increases has this company had? How many years of dividend consecutive payouts have they had? What is the payout ratio? What is the 5-year CAGR, or compound annual growth rate? And finally, what is the PE ratio, or price to earnings? So let's get started. So if you're in Fidelity, you can go to this Dividends and Earnings tab, click on it, and immediately see the dividend yield right here, 3.67. You can also see other information about the dividend if you click on this little more area right here. But for now, this is where you would find the dividend yield, 3.67. Now, if you're in TD Ameritrade, that dividend yield is right here. And you can see it's a little bit different. And that's something that you're going to notice as you go across different resources, is that the numbers may be slightly different based on the calculation of that particular website, or maybe the data feed that they're using. So just keep that in mind. Now, another place you can go, let's say you don't have a brokerage, is just Google it. And so you could just say FTS dividend yield, and boom, right there, the annual dividend yield comes up. So now we know what the dividend yield is for Fortis, 3.67. So that's going to be what the company is going to pay you out every quarter or every month. And my target is between 2 and 5% on really good long-term holds. Now, we are in a down market, and so it's a little bit of an embarrassment of riches right now, where there's quite a few options at 6% and even 7 and 8%. But to me, that's where the top end starts to come in for regular individual dividend stocks. I'm not talking about CEFs or ETFs. I'm talking about regular, individual company stocks that have annual dividend raises that you can count on, and maybe are even growth stocks. So that's my range, between 2 and 5% is where I like to see it. Okay, so now we have the dividend yield, let's take a look at beta. And beta is essentially how volatile is this stock relative to the rest of the market. And I like to have companies that have a beta of less than 1. In TD Ameritrade, you can see right here, it says beta. And again, you can see the measure of a security's volatility in relation to the S&P 500. And that a beta less than 1 means the security's price, or NAV, has been less volatile than the market. And here you can see Fortis has a beta of 0.2, which, as you'll see a little bit later as compared to other companies, is extremely, extremely low. And if you don't have TD Ameritrade, you could go to a place like Dividend.com, and here I've searched for FTS, and under the Ratings tab, you can see right here, Returns Risk, 0.2 beta. Or go to Google and put in FTS beta, and you can kind of see right here, what is the beta of Fortis? And there you go, 0.16. Round that up to 0.2. And so we've answered our question on Fortis for the beta. It's not very volatile. which is great. It's a nice, stable stock. So that checks the box. Now we have to ask ourselves, how long have they been paying the dividend? And have they been growing the dividend yield? And so these are the next two boxes to fill out. How many years has Fortis been increasing their dividend? And have they been paying the dividend consecutively for a long time? I want to know that they are going to pay me my paycheck every single quarter without fail. And also, I want to know that they're going to give me an annual raise. So those are the two things that I'm looking for here. And one of the best places that I found for consolidated information is Seeking Alpha. So if you go to Seeking Alpha and you put in FTS, you'll find this lovely dividends tab. And if you click on that, you'll start to see all of the information you're looking for. Here's that dividend yield that we were hunting for before. And here's a couple more pieces of information. The dividend growth. You can go to this dividends history tab and boom, there's the information you're looking for. Fortis has been raising their dividends for the past 7 years, but they've been consecutively paying out the dividends for the past 31 years. And so then you can actually see the detail of exactly what the payouts have been for the last 5 years, or the last 10 years, or even the last 30 years, which is an amazing amount of information all in one place. And so now we can go ahead and put that information in here. And so it doesn't quite tick the box of at least 10 years plus there, but you can see how long and how consistently they've been paying out, with some years where they just kept the dividend flat. Okay, so the next question is, what is the payout ratio? And one way to think about the payout ratio is, do they have enough cash flow to pay for the dividend? Because even if they have paid for it in the past, what about going forward? Can they cover this dividend? Do they have enough money? And so for this, we can go back to Seeking Alpha and take a look at the dividend scorecard. And so here you can see a payout ratio of 75%. Now, 75% is a little bit high, but it's actually typical of utility type companies because they have quite a bit of investments that they have to make to keep the company going. So that's just a little caveat in the electric utilities industry that comes with a little bit of experience. And so 75% payout ratio in this industry is actually not bad. But I'll show you what some of the other payout ratios look like as we compare other stocks to this. If you don't have Seeking Alpha, you could go to a place like Dividend.com, and they also show a payout ratio estimate here, and their estimate is a little bit different at 73%. But let's go ahead and use the one that we found from Seeking Alpha at 75%. Now the range I like to see is somewhere in the neighborhood of 40 to 60%, which would mean that there's just a lot of safety and a lot of cash cushion in order to be able to continue to pay that dividend. Now, the next question I ask myself when picking a stock is, are they growing as a company? Do they continue to grow and grow the dividend? And this is called CAGR, or Compound Annual Growth Rate. And so I like to take a look at the 5-year CAGR, although you can take a look at a 3-year or 10-year CAGR as well. And I like to see at least 5%. And so if you're inside Seeking Alpha, it makes it really easy because they consolidate all the information. And so you could go into the dividends tab and go into growth, dividend growth, and immediately see this dividend growth 5-year CAGR at 5.4%. You could also go to Dividend.com and see the 5-year CAGR right here, again, at 5.4%. So now we've put in that piece of information, and it also checks the box. The last question is, let's assume that all of these numbers look pretty good as a long-term hold. The final question is the price to earnings ratio showing that the company is a good value, meaning it's something I should buy right now because the price is within my range? And so my target here is, I would love to see this under 20, and it could be between 20 and 30, which means it's a fair value, but not over 30 times, because typically then it's not a good time to buy. And so if you go to Fortis and valuation, you can see the PE ratios here about 20. And again, if you kind of double check that on Fidelity, let's say, you can see the PE ratio here, again, right around 20.8. And you can even double check that in TD Ameritrade if you have this brokerage right here, PE ratio about 20. So let's pick one of those numbers. And so there you have it. Fortis at a 3.67, which is a yield right in the middle of the range. It's okay. Beta is excellent. Dividend increases is okay. Consecutive years of payout, though, is fantastic. The payout ratio is high, but actually pretty in line for electric utilities. And the CAGR is actually good for a utility company, which is pretty steady. Now, the PE ratio is a little high. That's how I would read it. Because let me show you something here. If I zoom out to the last 2 years, you can see how Fortis went all the way down into the 30s, $34 share price. And I started building a position all the way through this time frame because of the price being low. And I continued to build this position all the way through just about the last 6 months until recently. And then I stopped buying because the PE ratio, as we just saw, is starting to get above 20. So it's a great stock. It's a great long-term stock. It's one that I hold, but I might take a pause on buying simply because of this number right here. Okay, so now you have a good sense of what the KPIs are and maybe even where to get them and some of the sources that I like to use that are free and paid and inside your brokerage. Now let's take a look at other stocks just as a point of comparison. And I just picked a variety so that you could see the wide swings. So what does Mo look like? Well, as you can see, Mo has a very high yield at 8.23. But the beta is actually pretty low, which means the stock price doesn't move up or down very much. They have an incredible track record of increasing the dividends and also paying out the dividends for 53 years. But the payout ratio is actually pretty high. And the reason for that is this is a maintain to declining industry in terms of the base tobacco business. So the business is being run pretty tight operationally and is essentially in what's called a cash cow quadrant. But the 5-year CAGR is actually still high. And the PE ratio is very low at under 15. So with Mo, you don't get a lot of volatility. You still get a pretty good 5-year CAGR, and the value is really good. And so that's what Mo looks like just on the base numbers. But let's take a look at a growth stock like Avgo, a chip designer. You can see their dividend yield is much lower at 2.93, which is actually still pretty high for a tech company. Beta is 1.1, which is just above that range of 1.0. They've been paying dividend increases for the last 11 years and paying consecutively for 11 years. They have a very nice 44% payout ratio, an incredible 25% plus 5-year CAGR, and the PE ratio is actually not too bad at 21. What about something like Pepsi? Well, Pepsi's at a 2.59 dividend yield, which is also a beta of 1.1, so that checks the box. An incredible history of 50 years of increasing that dividend and 50 years of paying it out, which is top notch. It's dividend king territory. And the payout ratio is okay at 65%. They've got a CAGR of 7.4, which is above that 5% minimum, but the PE ratio is actually really high at 40. And the problem with some stocks you'll find that you really want to own is that you wait month after month, quarter after quarter, maybe even year after year for a stock like this to go on sale. And then you find that it never does. So you go ahead and buy it at the cheapest price that you can. And that's something you're going to find as you go through this exercise and take a look at stocks that you're interested in. And finally, let's look at something like Met. MetLife is at a 4% yield, a 1.0 beta. They have not been increasing their dividends. Okay, so this is a good piece of bonus content. This is a great example of how when you look across Fidelity, TD, Dividend.com, Seeking Alpha, etc., you really need to check any number that doesn't seem right to you. And after I made my recording, I was thinking, what in the world? Met does not have 0 years of raising their dividend. That's not right. So I went back into Seeking Alpha. I went into dividend history, and you can see it says 0 right here with a grading of F. And that just is not right. So you look back and look into the detail, and you can actually see the amounts right here of the dividend and how it actually is growing. 0.52 from zero point 0.5. And then you can see this number here, which is likely what's kind of screwing it up, their calculations. And so on and so forth. You can see the dividend at 0.46, 0.4, 0.42. And so you can see that it has been growing. And then it went from 2013 into annual payments. And so another place to check is the actual website of a company itself. And here again, you can see the dividend information, 0.52, 0.5, 0.48, going all the way back from when they used to pay annually, starting in 2000. So again, that's that paying for 21, 22 years. But you can see that the continual dividend increases over time. This is all part of being a dividend investor, is gathering your information and then double checking the information and making sure that it rings true with what you know. All right, peace out. But they have over 20 years of paying it out and an extremely low payout ratio, a 5.7% CAGR, and still a pretty high PE ratio at almost 28. So those are just a smattering of examples I wanted to put next to one another so that you could see what it looks like as you start to fill in this information and take a look at where there's potentially high growth, like Avgo, high yield, like Mo, high PE, like Pepsi, or low payout ratio, like Met. Well, that's it for today. And if you're interested in a premium Seeking Alpha subscription to do additional research, please feel free to click on the link in the description below, as you know I'm an affiliate. And don't forget to also follow me on Instagram and Twitter if you'd like more of a real-time daily interaction. Okay, as always, I encourage you to do your own research, then implement and learn by putting it into practice. And as a reminder, I'm not a financial advisor, so keep in mind these videos are for entertainment and inspiration only. I'll see you on the flip side.